Happy 2025. This is actually our first recording of 2025 for the Around the Coin podcast. I'm your host with the most, Stephen Sargeant. Today we have Marcos Viriato, co-founder and CEO of Parfin. What an amazing conversation. We go deep about investment banking, real-world asset tokenization, and actually real use cases of how traditional financial institutions are using this technology, how regulators and authorities around the world and governing banks and central banks are using this technology to have privacy and scalability when it comes to their blockchain solutions. We talk a lot about what's happening in the Latin American region, especially around remittances and, a hedge against things like hyperinflation. We talk about what's really happening at the ground level there, but we also go into discussions around stablecoins, the huge phenomenon of stablecoins, especially going into 2025. This is a great conversation from someone that's technical focused, that has a really good understanding of the traditional financial ecosystem and how his company, Parfin, and their solution, Rails, is going to completely evolve the global financial ecosystem. This is no better way to start off 2025 with a real conversation. And he even slips out some tips and tricks of what the real techie people are playing with on the weekends that could help benefit your organization and your career. Hope you like it. Reach out. It's 2025. Reach out. Let me know what you guys think. Talk soon. This is your host, Stephen Sargeant, the Around the Coin podcast. This is actually our first recording of 2025, where we are recording, and you'll hear it later, but we have the CEO of Parfin. We have Marcos Viriato. Marcos, you're the co-founder and CEO of Parfin, a leading fintech company based out of Latin America. Tell us a little bit about yourself, and then we're going to dive in and ask you a bunch of questions of what's going on, especially when it comes to real-world token asset tokenization in that region.
Yes, thanks, Stephen. Happy New Year, everybody. Again, it's the first speech of the year. I might be a little bit slow, but let's move on. So we founded Parfin like 5 years ago. The view was that, and I come from a financial markets background, but I saw that, crypto blockchain would transform financial markets as we know. So, but there was a lack of techie companies serving institutions. So we start building, infrastructure to allow financial institutions to adopt crypto, to adopt blockchain and the benefits that comes with it. So here we are 5 years later. It's been very exciting. I think the market's turning to a very good momentum with the new election in the US with Trump and all this pro-crypto momentum. So we're very excited to be here. Thank you.
I'd love to actually do this before we go into your background. You mentioned Trump. I'm in Canada, so obviously the Trump election. I think Trump is making a lot of jokes now on Twitter about Canada becoming, the 51st state and becoming part of the United States, which I think is scaring many Canadians altogether. What is the impact in the U.S., with the landscape that you see in Latin America? Are you watching that election closely, or is it just you're just watching as that the U.S. is the gateway to digital asset adoption around the world, or is there a huge influence of what happens in the U.S. to Latin America's region?
Yeah, I think, again, the US has been lagging behind regulatory framework for crypto, tokenization, and so on. Obviously, there are some elements at state level that you can play, but, and I think, and what we've seen in Latin America, the regulators pro-crypto, incentivizing the usage of, blockchain technology. So I think with the Trump election, there will be a huge catch-up, and the market in US is, generally speaking, is 100 times bigger than any other market in the world. So the potential is enormous. So you cannot miss this opportunity. So, for us, it's going to be very important to see how this, new administration run effectively, right? The crypto legislation. I think there's an alignment between the Congress and now the SEC and the regulators. So I think it's going to be a once-in-a-lifetime opportunity.
Yeah, like regulation by guidance sounds a lot better than regulation by enforcement, which seems that the U.S. has kind of adopted over the last few years. And, people are like, why is it so important? Well, it's hard for companies to build if they don't know if they're going to be penalized until after the fact. And, they kind of siphons or at least stifles innovation here in the U.S. and other places. I want to talk to you about, your investment banking background. You're in Latin America, 2007 to 2019, working with one of the biggest investment banks. what was happening, especially around that global recession in 2008, 2009? What was happening between that 10-year span? What was the evolution of investment banking, especially in the region?
So what we're seeing is that, the investment bank, obviously, it's very regional because, again, you get the global investment banks in US, Goldman Sachs, JP Morgan, Morgan Stanley, and a few others. Obviously, they're massive, but it's quite difficult to enter into other regions. They have small branches and offices, but, I think what we've seen with the BTG was super. We sort of expanded to Chile, Colombia, Peru, Mexico. The bank grew a lot, and there was a lot of innovation happening, on the cross-border payment, on, equity capital markets, debt capital markets. And I think the region in general passed quite well through the 2008 crisis. And then we got a very good momentum after that, where there was a bull run. But going back, well, we've seen some, like, I know that the bank set up a trading desk in crypto, which was very advanced. The bank issued an STO back there, a secured token offering. That's 2017, 2016. So it's very innovative, whereas banks in US couldn't even touch it, so I think that opened a lot of doors. And now we've seen some banks even holding, crypto investments in Bitcoin, like, for instance, which is, heard in other places around the world. So it's super exciting.
That's amazing. When did you first hear about the concept of Bitcoin? Was it in your banking stage? I know you have a mechanical engineer background. So I'd love actually to know, before we jump into your Bitcoin story, what were you planning to do? What was your career plans when you were in school getting that mechanical engineering? I feel like you're probably, would have your eyes set on something like a SpaceX or a Tesla with that background. I know those good companies may not have been invented back then, but what was your plan in university? What was like the dream job when you were taking that program?
I thought that would be a mechanical engineer and build, car engines and so on. That's what my uncle was, a mechanical, a very famous mechanical engineer, designed engines, etc. But generally speaking, in especially in Brazil and Latin America, engineers go to financial markets. So as a very first year, I started my internship at the financial markets, and I love it. I love it. So I jumped to that, but that was very linked to technology. I always, start programming. Since I was a kid, I start understanding computers and building computers in back in the day. So how I got to crypto was a funny history. In 2013, at certain point, I was the CTO for the entire bank, globally, running technology. And basically 2013, we implemented the first ever production system in AWS. Back there, 10 years ago, was forbidden to talk about cloud for banks. With it's backup security.
No,
you don't control.
You could not have anything out there. If it wasn't in a server within the basement of a bank, it did not exist in real life.
Exactly. So we put the very first production system into the AWS. My view was that, why we would have a data center? It's true. Forget about it. So we won a prize, and AWS invited us to get this prize in their annual conference in Las Vegas. So I flew there to Las Vegas. It was a big show. It was a big, event, a lot of innovation happening. And I went with my guy that used to work for me, my head of technology in US. He was a very geek guy. He was like, hey, Marcos, you should buy this stuff. Obviously, I heard about Bitcoin before, but he convinced me to buy my first Bitcoins. It was 2014. And I didn't know, you're curious, you're tech-driven guy. So it's like, okay, I'm going to buy. How do I do that? I opened my account, and there was an exchange called Poloniex back there. I opened my account, swiped my card. I bought $2,000. I said, how much I buy? He said, 1,000, 2,000, whatever. I bought $2,000. It was $620 plus each. I remember it was 3.21 Bitcoins, And then I said, oh my God, this is interesting. But more importantly, he sent me the Satoshi white paper. And I remember when I read it, I was like, oh my God, this technology is so powerful because it involves cryptography, involves, on-chain transactions, and transactions are immutable. And, it's decentralized, it's processed. I said, oh my God. Then I found a rabbit hole. I tell people that I got married to Bitcoin in Las Vegas,
it's probably a lot cheaper than that way to get paid in real
Exactly.
life. I'm interested because, you're already forward thinking at the bank, right? Getting into AWS 10 years ago is not the AWS that everyone knows today. Did you think, this would be, something that will actually challenge your job and the bank? Or did you think of like, this is more of like complementary to what you were already building in the bank and would just expand the suite of services that you could offer in the future? Or do you think like with a lot of, investment banking thought like, hey, I don't want to get into this asset class. It's going to take away from all the commissions I'm making on these other asset classes that we're getting paid on right now.
Yeah, the thing is, investment banks generally are risk takers, right? You see,
Right.
the nature of the business is to, leverage clients, to lend money, to do complex transactions. So investment banks are, as a nature, is a risk takers, right?
Yeah.
So, and when we run a technology, you need to be ahead. It's like I keep telling, like banks are, technology companies that provide financial services, because if you take like the amount of money those banks like JP Morgan, Bank of Montreal, Scotiabank, all those banks, they invest millions and millions of dollars in technology to support. There will be no longer branches around. It's like, so the technology is driven the way the banks move with AI now, with all that's happening. So back there, we should test other technologies. We should, otherwise you stay behind. So my view was that testing AWS or blockchain solution, it was a must. Otherwise, you lag behind. And that's the mentality. Obviously, you have to measure the risks. But I remember from a careers perspective, we were very, we're living in a meritocracy environment at the bank. So you had to do things differently. You have to think out of the box. You have to deliver, more with less in terms of resources, investment. So you have to, innovate. And that's the beauty of it. A lot of people criticize the banks sometimes, but banks they use that technology, right? So you take like those big banks, JP Morgan and Goldman Sachs, they invest heavily in technology. Like it's amazing.
I love it. You mentioned AI. You were taking AI and machine learning courses in 2017. So right around this blockchain crypto phase. What prompted you to get into that? And then secondly, are you surprised over the last 2 years how much this technology has grown from when you were learning about it almost what feels like decades ago, really only 7 years ago? But in AI, like just like dog years, in the AI years, we're evolving, within minutes versus, the years it takes for like blockchain technology. What prompted you to get into it? And are you kind of shocked about how quickly it picked up, especially, looking at what AI was into 2017 versus what you're seeing and what people are using it for now?
Yeah, I think the reason I did the course, it was like, it had been like 10 years since I last programmed. And I said, I want to learn in depth how to build, the algorithm for AI. So I start, coding, and to realize that, the combination of the different models could be very powerful. But back there, you didn't have a lot of libraries. I remember Python, was just starting, and I said, "Oh my God, this could be very powerful," but it was very immature. It was very immature. And what happened, I think, over the last 2-3 years, especially with OpenAI, the models are coming out of the box. You just need to, use it. And I think also, obviously, storage of data decreased in price. There's a combination of factors, right? Processing capacity increased, storage of data decreased, models got more advanced to work with unstructured data. Because back there, you have to have very structured data to run models. Now, they work very well with unstructured data. It's unbelievable. So I think that's the evolution. And now, people are combining different models. I think it's going to be very promising, Let's see how it goes. But I'm very excited about it, I think we're still going to see a huge wave of adoption. There's still at the very beginning. Like if you compare the internet of late 90s to it's the very beginning of this AI revolution. I think 2025 is going to be the year,
Yeah, and I think it happens so quickly. Like, I don't know your age, but I started on the internet when AOL had CDs that they used to mail to your house, and you have to put the CD in to even log to even log on. And then like the internet connection, and the bookajooch, like that's, and then like to today where we don't even think about the internet, we just assume that it should load within seconds. Before you'd have to wait like an hour just to log on and hope that your mom didn't need to use the phone. Otherwise, you'd have to break your connection. Let's get into Parfin 2019. You have obviously you have the technical chops to start your own organization. Talk to me maybe about your co-founder. How do you find that business person that's like, hey, I have this concept. I know I can probably build it, but I also need to be able to sell. And or did you have those sales chops as well, or were you looking for somebody that could kind of fill in the other gaps that were needed to build a successful business?
Yeah, back then, well, what happened, again, it was quite funny. I decided to leave the bank. I was living in London for like 5 years, and I decided to leave the bank. I said, oh, it's enough. After, I have 25 plus years of financial markets, but 12 and a half years at the bank. And I said, okay, I'm going to do something else. So it was early 2019. But the funny thing was that back there, I used to do a little bit, investments in startups and, crypto. I was 14, 15, 16. I was deeply investing to all the ICOs or crypto. So going crazy, and I invested in a few companies. Parfin was one of them. It was funny because, the guy came with an idea, which is a co-founder, Christian, to build a regulated stablecoin in UK. And my thought back there, and the stablecoin market at the time was like $50 million market cap. There was a little bit of Paxos. Circ was just the beginning. Tether was like very tiny, And I said, okay, I think it makes sense to have a regulated stablecoin. And I invested a little bit of money. And 3 months later, I left the bank and I started helping I had like 5, 6 investments. I started helping some of the founders, being the sounding board. And at some point, the guys at Parfin said, why don't you come? And I said, okay, if I come, I will run the company. So then I took a sabbatical. 6 months later, I joined full-time. I was actually the first full-time employee. And then I took the CEO. Then we found Alex Bulao, which is our CTO. He's a brilliant guy. Alex started mining Bitcoin back in 2013. He, did a bunch of wallets and block explorers for protocols back there. I think more important, Alex also built a site called CoinScandal, which was the largest ICO portal with 10 million visitors a month back in 15, 16. And it was super famous. So when we got together, it was funny because we had the same vision. We said, oh my God, this blockchain technology and DeFi will transform, markets, as especially financial markets. And so we start building. We got together and we start building. It's quite challenging because the 2020, effectively, we got together Feb 2020 to say, okay, this is the kickoff of the company. We hired developers, and then a month later, the pandemic came, and we were like, oh my God, we're gonna go broke because we didn't have funding. You're paying ourselves, the developers, and it was worth it. It was quite funny.
Tell me about the stablecoin angle. Was it more so that you saw the need for stablecoins? Like even Tether was more so for trading. I think that's where it was really originated for traders, sophisticated traders. But you're coming from a region like Latin America where it's like remittance heavy. Did you see the need for something like a stable currency where it wouldn't be devalued overnight? It could be sent, it can be paid. You can get access to paying people overseas. It's hard to run a business if you can't get access to fiat dollars at your own banking institution, which we see in places like Africa and Latin America. Is that why the stablecoin, concept resonated more with you? Was it more on the remittance, or you just thought like, hey, this is not a huge market, but it could be huge. Maybe we should dabble in it early?
No, it was more toward the remittance and the easy access to this. I remember back in 17, 18, again, there was a lot of 17, 18, the ICO boom happened. And it was fantastic because it proved that the technology could hold tokenized assets in a global scale and being distributed to millions of people. That's what happened. Obviously, 95% of the ICOs were fake or didn't, but And remember, there was a $35 billion invested globally through, the technology. You had tokens, you had everything. So then 17, 18, what triggered me that a stablecoin could boom, it was that Ripple did a partnership with a lot of banks, like Santander, JP, all of the banks invested into Ripple with the promise to use their technology, their protocol for instantaneous payments around the world. What was the problem? Was the volatility of the XRP, and that created the go no go. Meaning, we invested into Ripple, but why? I'm gonna transfer $100,000 worth of Ripple, and it could get there 50 or could get 150. How come? They tried to create later, the Ripple settlement network, etc.
Yeah.
And now they just launched their stablecoin, right? But I think if that time they had their stablecoin, the history would have been different because, the size of the banks that invested back there. So my view was, wow, they have the protocol, the infrastructure to process global payments, but the asset is so volatile that it doesn't happen. Banks, clients, the clients of the banks, they don't want to buy $100,000 equivalent, running the risk of getting there on the other side to like half of the price, whatever it is. So that's why I thought that stable coins will be a killer app, and de facto has been a killer app in Latin America. The usage of stable coins to two things: to protect against the country's currency devaluation, and to do cross-border payments. That's unbelievable. You see, you mentioned El Salvador, there's Chile, Colombia, Peru, Mexico, Argentina especially is booming in terms of the usage of stable coins for payments and to protect against the peso devaluation. Brazil is the same. Brazil, people keep stable coins to use for cross-border payment. I think this is just the beginning of a big shift into the global remittance and cross-border payments.
Yeah, and Chainalysis shows, the Chainalysis Geo report shows that I believe it's the fifth company growing when it comes to crypto adoption. It's been the growth of it. I think it says here growth year over year 42%. Talk to me a little bit. You're in the region. Like, what is the real, give me some horror stories of what hyperinflation really looks like. I think we hear about it in other countries, 100% interest. It doesn't really hit home. What does that mean? Can you give some scenarios of what, a worst case hyperinflation? Hey, I bought a home and all of a sudden my, mortgage payment went from $1,000 to $10,000 a month. Talk to me about what hyperinflation looks like and the importance of having digital asset tokenization in these regions.
Yeah, on the late 80s, early 90s, Brazil had a 35-40% inflation a month. I remember, I give an example. You go to a gas station and then you say, okay, I'm going to fill my car. It's going to be, $100. The next day you go for the same amount is 135. And then 2 days later, it's and that's the scenario, the money you had in your pocket cannot buy the same stuff, the following day. It's unbelievable. This is, again, it was crazy. I remember there are many companies that broke, people were, killing themselves because, they don't have enough money, your paycheck is just nothing at the end of the month. And that was very crazy. A country like Argentina, there are months where the inflation was at 70%. It's imagine you have a paycheck of $10,000 and you buy X. The next day, you can buy 30% X because there is a 70% inflation. Your salary will not follow, this increase. So
and the salary is not going to keep up with it. And then obviously, if they can't pay people and nobody's spending money, then obviously that eliminates a lot of jobs just from a macroeconomic thoughts. Is that why a lot of these countries ended up getting into, let's say into the drug trade, but it turns into violence and theft because there's really no other option. You really just can't buy anything. You're not getting paid enough. Is that why you feel like maybe a lot more of that criminal intent happened in these jurisdictions?
I think there's a structural problem of lack of education in most of those countries. And then people with less education cannot get better jobs. And then without good jobs, they cannot, have a better standard of living, meaning, they cannot ascend into the chain of,
Right.
if they don't have opportunity, they will never have opportunity. So,
Right.
and that's a vicious cycle because, the sons and the daughters of those people will not have opportunities either. And then their grandsons and granddaughters will not have the opportunity. And then, when you see the population grows in poverty, and that's very
Right.
bad, that's very, so you need to break the cycle. And again, that's on the hand of our politicians. It's quite difficult. They have their own interest. So you see in Argentina, I think the poverty level reached like 60% of the population,
Wow.
which means that 60% of the population makes less than the minimum wage, in a monthly basis. So it's very bad, right?
Have you seen any changes? Like we see a lot of gig work where, people in the companies in the US and all over the world are now looking in places like Latin America, the Philippines for, remote work. Has that helped the economy in any way where now, even if you're, living somewhat in poverty, if you can learn how to do video editing, now all of a sudden now $1,000 US is like crazy money, could, change your entire life. Do you see a lot more gig work, that type of work where people are
Yeah,
trying to get
yeah.
into remote opportunities?
Especially nearshoring, there are a lot of, we see after the pandemic, one thing
Right.
that changed a lot is the remote work, obviously. And Brazil and Argentina and few other countries, they have a good, again, it's not that because of the poverty is high, the level of poverty is high, is that you don't have good professionals. You have very good
Right.
professionals, especially for programmers and developers. There's a, huge opportunity because you can make US salary not being US. And that's fantastic because you bring money to the country and you spend it. So it generates a little bit of a good economic momentum in the country. But, it's not for all because, again, there are some people that don't speak English fluently,
Right.
and that comes with a few other problems.
Awesome. Now tell me about Parfin. You're attempting to revolutionize the global financial system. What are some problems that you're trying to, like, what is the one issue, whether this process that you're seeing that you think Parfin and, digital assets can help change the way that we do finance across the world?
Yeah. So banks in general are very conservative in terms of security, taking, risks for anti-money laundering and know your customers. And, they're afraid of, being part of a scam and etc. So when we start building Parfin, we said first, and again, that's different because blockchain technology is a completely different landscape. You have to deal with private keys. You have to deal with, different protocols. It's a different, programming language. So it's a skill that currently most of financial institutions don't have. So what we see, okay, we need to build technology that will ramp up, that will allow those banks to use, blockchain technology to improve their financial services. Which financial services? Oh, there are many. Like for instance, you could, and we've done some proof of concept and implementations where, a bank, had a very, inefficient, process to provide, car loans to their clients. So what we have done, we have tokenized the title of the car, we've tokenized the deposit of the bank and the loan contract. So there's a huge efficiency on, doing a deliver versus payment, delivering the car, the token that represents the car title to the, buyer against the tokenized deposit, deliver versus payment, and again, attach it to a clear, tokenized loan agreement. And that's something that, the bank had 3 different systems to do that. And all of a sudden they had one single process integrated. And they say, oh my God, this improves us tremendously, the settlement life cycle, the control of the title, the car, and so on. So that's one example, but, commercial receivables, we have a big bank tokenizing commercial receipt for the clients. And what's the benefit of it? They tokenize the commercial receipt. So let's say I have a factory. I sell $100,000 a month of goods to my clients, but they pay me in like 60 days, 90 days. So basically I have a receivable, a commercial receivable. I sold the product, but so you got it, you tokenize that representation of the receivable. And all of a sudden, the bank sells it to investors that want to buy with a discount.
Right.
But this is very centralized. So we're using lending pools. So you tokenize the commercial receivables, collateralized in a lending pool, and there are investors and other people, lending money against that, collateralized receivable. That's fantastic. You cannot do this today through normal circumstances. So, and I think that's the revolution. That's how we are bringing together the beauty of what's happening into the DeFi world, lending pools, debts, and so on, in a more sort of regulated, sophisticated way to allow banks to leverage this technology and provide new services, new ways of doing, old things, let's call it.
And I think that's important, right? Because I think, early, you probably know better than me, in 2017, they're probably trying to sell you at the bank blockchain, all these new use cases. Instead of just saying, hey, these are some of the traditional examples where we're struggling. This is how we can leverage blockchain technology to expedite those services, expedite those processes, versus like, hey, let's use blockchain to invest in NFTs, where I think a lot of the blockchain consultants try to get the banks on board. And then you're providing them like, hey, this is an actual use case you have a problem with. We can now fix your car loans, but this will also go to personal loans. And as you said, when it comes into lending pools. But talk to me about, the stablecoin infrastructure. We saw BVNK just released a report, a decade of the digital dollars. Tether just had their 10-year anniversary. But we saw in that report the flows from places like the US and Europe into Latin America when it comes to stable coins. Like, can you explain why this is driving such an international phenomenon when it comes to stable coins, and why like Latin America is at the center of this hub?
Yeah, I think, especially when it comes to Latin America, the regulatory framework is a little bit more open. What's not prohibited is allowed, right? Specifically. So which means that you can do obviously you're not committing a crime or doing any fraud, but I think that incentivizes people to innovate, to think out of the box. So you have a small importer importing goods from China, from Colombia, in Brazil, Latin America. And then all of a sudden, they have difficulties to close, to buy dollars to pay the goods. They have difficulties to open accounts with banks and then that. And then they say, okay, Chinese or whatever, provider of the goods say, oh, you can pay me in stablecoins. And they say, oh, how do I do it? We go to an exchange, buy stablecoins and remit abroad. And that's how things started. And again, it's billions of dollars being transacted a day because of that, And again, it is, prohibited from a legal perspective? No. So people start doing this. People that travel abroad all of a sudden have their, digital wallets with their, debit cards. So they are traveling to Europe, to US, whatever. Why not get, a wallet that they can, have a debit card they use and that the stablecoin. So I think that was, huge over the last few years here. And I think this is what will grow much more because that was used by small companies, individuals, etc. Now we've seen a big shift in big, companies looking to use the same process, using stablecoins for payments and so on.
And why would they use Parfin's infrastructure? Was this maybe, expanded because of what happened with FTX and using centralized exchanges, adding intermediaries between these transactions? What's the benefit of using Parfin versus them going directly to a crypto exchange and then facilitating the payments that way?
We have, one of our products, so it's connected to more than 25 counterparties, and it have like post-trade settlement controls and limits. So it gives you a lot of flexibility, to execute transactions, USDC, USDT, whatever it is, in a very seamless way and getting it out of the liquidity providers, bringing it to the internal custody and process payment in a secure way. So I think we allow the banks to have full flexibility to control which counterparty they want to use. And I think after, the FTX, what happened is the counterparty risk on crypto has been, especially for banks, has been, let's call discovered, because everyone used to trust all the liquidity providers. Now after FTX, you say, okay, what's your balance sheet? How, do you have a proof of reserves for your exchange? How do you control anti-money laundering? So banks are much more, when they trade and they open accounts with the exchange, they're much more rigorous in terms of knowing your counterparty, assessing their credit risk. And I think that's what's improved. And again, even on the traditional financial markets, you never trade with one single liquidity provider.
Right.
You have more than one broker. So that's the beauty. We allow them, we are neutral. We're not a counterparty. We allow them to use all of them to manage, their settlement flows instantaneously. So it helps them to transact with crypto.
Now we fortified the necessity for stablecoins, but we see Brazil, and I think even Rails has helped them with it, introducing central bank digital currencies. They're experimenting, going through different phases. What's the dichotomy between stablecoins and central bank CBDCs here that you're seeing, and how are you facilitating that on both sides? Whether it's working with regulators, working with private sector that are like, hey, the last person or the last entity you want creating its own stablecoin is a government, right? Like, leave that to the private entities. The joke I always hear going around is from Circle, like, you don't want the regulators to build the planes, you want the regulators to regulate the building of the planes. And it seems like in this scenario where the regulators are trying to build the plane, right? They're building the digital asset technology to use. What are your thoughts on this?
Yeah, I think there will be different purposes for, when it comes to CBDC. Obviously, there are countries in which the payment infrastructure is very inefficient, meaning if you to process a payment in some countries, it takes 2-3 days for the payment to get to the receiver. And that's unheard of, right? On both wholesale and retail, meaning to individuals or in between banks and financial institutions. So there are some CBDC projects that are looking to improve their payment infrastructure, which is not the case for Brazil because it's very efficient. We have Pix, which is the instantaneous payment mechanism. I just Pix you, it's seconds, it's in your account. So Brazil was looking to build their CBDC, and the central bank is very innovative in that regard, much more to improve financial services, to use DeFi protocols. So when the Central Bank of Brazil did the first CBDC sandbox 2 years ago, they invited Av. Av was one of the participants. Why? Because they want to see a decentralized lending pool, in a more regulated framework. So that's how innovative, developing countries are looking to the users of CBDCs. It's not to control, because you can enforce privacy protocols. That's what's the strength of Rails. So Rails, which is our blockchain ecosystem, is providing one of the privacy solutions for the Central Bank of Brazil when it comes to CBDC transactions. Guaranteeing that the parties that are looking at the blockchain cannot identify who is sending the money, who is receiving the amounts, and so on. So I think that's the evolution. Even Vitalik literally says, in one of his speeches, that, privacy within the blockchain would be one of the next frontiers. And I think, again, central banks will look to that. In some countries, central banks will say, I'm not going to do the CBDCs. I will therefore focus on a legal framework legal and regulatory framework for stablecoins, for private issues. And again, I think there are countries that will be both. The view we have is, either stablecoins or CBDCs, they will require the infrastructure we build.
That makes a lot of sense. And we're going to jump into Rails, but before we do, tell me a little bit about the regulatory. You mentioned regulation. You've mentioned that the regulators in Latin America are a little bit more, not lenient, but they're a little bit more innovative than what we're seeing in the US. But we also see places like UAE, the EU, they're coming out with comprehensive regulatory frameworks. We see now Singapore, Hong Kong following suit. What are your thoughts? Where would you rank Latin America when it comes to regulatory framework, especially around stablecoins, which is receiving a lot of scrutiny from regulators in places like North America? What are your thoughts on the regulatory framework to build on stablecoin or even CBDCs in your region?
Yeah, I think Latin America is obviously is getting more and more advanced when it comes to stablecoins. But I think UAE and even the central bank it's is leading the globally. I think is leading the pace, for clear regulatory framework. There will be, yesterday actually the famous MiCA marketing crypto assets. It's live, right,
Yeah.
in Europe. What does it mean? It means that now, you know, every institution, financial institution, or a crypto player can offer services regardless. If they are regulated, they can tokenize assets, they can issue their stable coins. Obviously, there are a lot of control, a lot of things that are happening, but I see that there will be a mass adoption. Like similarly to US, we've spoken about US. I think with the clear regulation, every single regional bank in US, every single payment institution, every single, remittance companies, broker dealer will start offering trading crypto, tokenized assets, and so on, and issuing their stable coins. I think that's the way I see regulatory framework coming. Again, Latin America, for the lack of regulation up to certain extent, has been, creating a lot of innovative companies, promoting, new services. And that's, I think it's where we're going to see the global markets going the coming 2-3 years,
What are your thoughts on Mika when it comes to things like Tether, right? We're seeing already that, Tether's going to have to be delisted if they're not following certain Mika protocols and requirements. Do you think that's a good thing that they're strengthening the market? Or do you think that they're, because there's other options, I'm assuming Circle is going to be regulated in the region. Do you think this is good, or should there be more competition? What are your thoughts on, something like Tether that has such a massive, breadth of coverage around the world now not being able to be offered to EU, which is somewhat of a small market for them compared to their global domination? Do you think that's a good thing for the EU, or probably not a great thing for the EU?
Listen, I think the usage of Tether for 8% of is very valid, and it has created a lot of innovation. But we know that there could be some, not good usage of the stable coin. Okay. And that's where regulators are willing to have a better view. They don't want to, something to be used for money laundering, for instance, right? And again, I think we will see in the future, most likely, my view is that, Tether will get regulated or will support. In some countries, they will, because they have a huge volume. And, if there's a clear regulation, they will need to comply with that. For the time being, and I don't think that would preclude innovation to happen, it's just that will create a more mass adoption. Let's say,
Right.
no, my grandma uses Tether. No, but in the future, probably she will, because it will regulate their bank. Her bank could, provide services with Tether. So that's the way I see it. I think it's not excludent that now they are not regulated in Europe, that they won't be. They said that they want, but I don't know. We will see,
Yeah, they're focused on probably on I think they just released their stablecoin in connection with Phoenix Group there in the UAE, building out a dirham-backed stablecoin. So there's other jurisdictions which seems like UAE is picking up a lot of the pace when it comes to leading the innovative race around the world. I'm curious about Rails because you mentioned the privacy acts, but you also have been focusing on scalability. We've had a lot of privacy protocols on this program where they talk about the more scalable, their protocol gets, the less privacy that they can afford to their users. How are you able to balance both of them? And how are you able to still keep the need for privacy, but also scale that technology so that people aren't losing the privacy the more user adoption the protocol gets?
Yeah, that's interesting, because we've been, the way we solve this scalability through a more architecture approach. So we've created this, it's called Rails nodes. A Rails nodes is a fork of the Ethereum client with highly modified, where you can tokenize assets there. And we've reached the 10,000 transactions per second. And that's the way we see the first wave of adoption by financial institutions. Sometimes they want to tokenize assets internally and to offer to their own clients. That Rails node would allow that you to do that. But if you were using a Rails node isolated, you are not in a global system. So we connected those into a Rails public chain, and we generate proofs using zero knowledge to allow the validation of the transactions that are happening within a Rails node. And again, at the public chain, all the users will be KYC. So if a bank or financial institution wants to port tokens from their Rails node to the public chain for the aggregation of liquidity or for other services, it's seamless integrated. So we're seeing this as allowing, again, both private and scalable transactions, at the same time connecting to a liquidity aggregation pool, which is the public chain. And that's the uniqueness of what we're doing at Rails. We're approaching a different angle. We say, Bats, you don't need to go to the public chain at the very beginning, but you can have your own infrastructure, and then you can seamless move tokens around to the public chain or to any other chain. So that's the approach. Again, coming from banks, we understand sometimes how they approach this, and we try to create an infrastructure that would allow them to, the first of a wave of adoption, I want to tokenize assets internally, then I move to a broader scale. Oh, but I am already connected to a public chain, to Rails public, so I can port tokens over, to export different services. That's how we're approaching it, and we're very excited because the acceptance has been quite good.
With all the sophisticated phishing attacks, how do you protect that permissioned environment from keeping bad actors from infiltrating one of the entities that do have permission and being there? How do you protect that it doesn't get compromised in any way through a sophisticated phishing attack on one of the banks or the other partners within this permissioned ecosystem?
Yeah, again, what happened is the Rails node runs within the bank's premises, so they have full control of it. And again, if there's a phishing that enter into the bank frontiers of security, then there will be other problems, right? So
the decentralized checkpoint will be probably the least of their worries.
Exactly. So that's why the approach we've done is that we would allow the banks to run things as they are used to. And again, the connection, obviously, with the other, let's call global network, then you have to keep the gates, right? The bridges in a very secure way. We're going to now soon, we're working with some, interoperability protocols, which are looking towards more the usage of their interoperability protocols within financial markets. And there are few, like Chainlink has been leading, Layer 0. And I think that's the next, to me, that's the next, let's say, evolution of banks adopting blockchain when it comes to a better interoperability.
I love it. I actually want to talk to you because you're talking about future announcements, but you just recently announced your partnership with JP Morgan's blockchain business unit. They selected Rails to participate in this epic ecosystem. Maybe talk a little bit about how they're exploring, privacy. And we heard a lot about identification and decentralized identification and, identification tokens. Talk to me a little bit about your participation and maybe your thoughts about decentralized ID as a whole.
Yeah, well, JP Morgan had Onyx. It used to be called Onyx. They renamed it to Kinaxis. They've been investing into this infrastructure for the last 10 years. It's run by JP Morgan. I think the first use case was repo infrastructure. So banks could borrow money against, government bonds in an easy way. The repo, to me, is one of the best cases for gaining efficiency in the financial markets. It's still very inefficient, especially for post-trade settlement. And, when you look at what Kinaxis wants to do, Kinaxis by JP Morgan, they want to start, again, decentralizing, bringing more partners to use the network. Okay, the blockchain is a permission. But what they need to guarantee that more partners come to use, our clients and other banks, they need privacy within transactions, right? So they test Rails nodes for the private transaction. And basically, it was a case where they were tokenizing funds, and funds are distributed to banks and clients through the RTAs, registered transfer agents. And it's currently is one of the most inefficient process ever, very prone to errors, etc. But, to do this within Kinaxis network, you need privacy. So Rails nodes was set up to provide privacy within this fund, life cycle. We also built very cool things using attestation services, which is on-chain KYC and on-chain suitability. What's on-chain suitability, for those that are not familiar with, is suitability is the process where I can assess the risk for Stephen and say, Stephen can buy those products and cannot buy those other products because of his risk profile. So what we've done using attestation services, we have, created a way that without disclosing who is Stephen and your data, to say that Stephen can buy or not this fund, and we did also a privacy auction where, people were bidding for to buy that fund without disclosing, how much you bid, but making sure that the winning bid was effectively the winning bid. So there are a lot of innovation that we put together. So we're bringing attestation services, zero knowledge, privacy solutions within a blockchain to allow, a very complex use case within financial markets. And that's the beauty. And the paper is available at Kinexys, website for those who are interested. It's a very detailed, and our solution scored pretty well on the requisites of GP. We're super excited. I think there's, when we envision to build this solution back there was to solve those sort of problems that banks face. And by being selected by JP Morgan to run this was some validation that our technology and what we're building really is at a very good momentum.
If I understand this correctly, does it make sense? This makes a lot of sense. So especially in the places like the US where you need to be an accredited investor, I want to be known as a accredited investor, but I don't need to release my net worth and all this other information. The bank just needs to know, hey, he can make an investment in this product because he is accredited, but we don't have to release all that other information that goes along with his net worth, his source of wealth. All of that's been covered. Would that be a particular example where you can use this technology?
That's exactly what we've done with JP. That's exactly what, and again, when we see it, we say, oh my God, when we built the technology, we're saying, oh, that can be used for this particular case or that particular case. And now it's becoming reality, And I think, you want to buy a certain product, but you don't want to disclose your data, your information. But, you are a credit investor. And again, you just need to, you just need a trusted party to test you, to validate you, before.
I'm curious, and I say this half jokingly, is there any assets you see people pushing to be on the blockchain and become a real world asset tokenization that you're like, this asset probably shouldn't be on the blockchain? This could probably be left off the blockchain. Is there anything that you see people pushing? I've seen carbon credits. I've seen so many different assets being pushed to be on chain. Is there any assets that you think are better left off chain?
Listen, I always hear about real estate. I think real estate, it's quite tricky because, you have to think of it, if it's a commercial building where it's being rented and you want to receive the renting proceeds in a distributed way, it's okay. But tokenizing a house, you own the house. You don't want your house to be, to collateralize your house to borrow money against it. So there are things that, people say, oh, there's $1 trillion market for real estate. Yes, there is. But, depending on the case, to me, it doesn't make sense to create a token. Most of what I see is that every single financial instrument will be tokenized because they're much more efficient. It's like stocks, bonds, derivatives, insurance policies, everything. So I think that's the way I see the first sort of wave of adoption. But, people are creative. People want to carbon credit, fine. But the problem with carbon credit is not tokenizing. It's to guarantee that it's capturing the CO2, reduction is so I think, trying to solve, every day we say, every day there are someone willing to tokenize something.
Right.
And we say, okay, but does it make sense? Maybe not. And I think the market will gain mature. Even regard to that, market will stabilize. People say, oh, it doesn't make sense. This doesn't make sense. Let's not do it. And, let's see.
I love it. We're ending coming close to this conversation. What are your thoughts? We're in early 2025. This is the first podcast we're recording. It won't go for about a month. I'm curious, what are your thoughts? I see a lot of NFT projects pushing their own tokens. Do you think that's wise, especially with the market that we had with NFTs? But we see the rise of meme coins and everyone trying to find innovative ways, to get more investment into their projects. What are your thoughts around this?
I think I love the usage of NFTs for cases like fidelization of clients or creating a sort of a reward scheme, and even representing art, whatever. But some of the meme coins projects are just like speculative and doesn't add any value. Obviously, within the crypto community, that's great because people are making a lot of money, and that's natural part of the business. But I think in the future, this will mature. I see, and that's a benefit for the crypto industry. Why? In a way, it's to generate a virtual cycle of self-investments.
Right.
If you look what happened at the crypto, there are some like unique protocols that got a lot of traction back in 16, 17, and they went self-funded because the token gained a lot of value, and therefore they had enough money to invest in other protocols, in other innovation. So that's something that you haven't seen, back in, especially on the venture capital or any history. So protocols that were created that, grew in market cap and through the diluted value, and they had enough money to finance themselves and to create more and more innovation, even through many coins. And those many coins technologies or interoperability and the stablecoin, they now can be ported over to create new solutions. So that's beauty. You talk about PayPal mafia. That's, I think, the guys invented PayPal, sold for hundreds of millions of dollars, and then got the money and start investing in venture capital and in other startups, which create an atmosphere. Within block, the protocol itself, it is meaningfully successful. It generates enough value that they invest in dApps and DeFi protocols and innovation. The protocol, is a self-funded mechanism to invest in innovation. That's, to me, is the beauty of crypto and blockchain. Obviously, there are some protocols that are just, buzz and blah, 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 but they're
Similar
real
to your
people.
point on ICOs, right? 95% were BS, but those 5% changed the entire landscape for the industry. I'm curious, before I let you go, what other features you talk about, partnerships with interoperability, anything new coming for Rails or anything else that we should be looking forward for in 2025?
Yeah, we're launching the testnet next month. Then it's super exciting because we're embedding this KYC, on-chain KYC, with a very sophisticated, without people need to disclose their IDs and so on. Then we're planning to launch the public chain on the second quarter. And the difference is that we already have some big banks and financial institutions using our technology, and we want to port them over to the blockchain. So we hope to bring a very good traction. And again, we're very excited because, we hope to, lead the way on bringing a new user base from banks and financial institutions to the crypto Web3 ecosystem. And that's what we're doing.
How challenging was it to build on Ethereum? I'm assuming with two pretty tech focused, you have a CTO, you've been the CTO. Why not build your own blockchain? I think it's a question I ask for people that actually build their own blockchain. Like, why bother building your own blockchain? For you, was it challenging to build on Ethereum? Is there thoughts about building your own blockchain ecosystem in the future?
Yeah, the thing is, like, we using, Ethereum because it's the most, let's say, mass adoption of developers around the world. I think, EVM is becoming the standard when it comes to the tokenization of assets, real world assets. So the way we see it, we evolved the EVM ecosystem within Rails to allow, financial markets and financial institutions to adopt blockchain. That's why we're bringing, unique primitives to the protocol that can be leveraged by financial institutions. And those primitives, as I mentioned, attestation services for suitability, on-chain suitability, on-chain KYC without disclosing the data, privacy auctions for financial instruments, privacy, lending pools. So there are a lot of cool stuff that we're doing. Again, that's why we call, unified, bringing DeFi innovation to a TradFi markets, unifying those concepts,
I love that. Before I let you go, you talked about how you and your friends were playing, with Bitcoin very early on. what are your seriously technical people doing now? What are they playing with on the weekends? Whether that's gadgets, drugs or treatments, like Brian Johnson, like trying to change his whole life, spending $2 million on supplements. What are the sports? What are the things that the tech focused people, the one percenters are doing that you see that seem quirky now, but might have, more mass adoption as we go further and further into this year?
I think, we always discuss, but I think I think the staking landscape is getting quite interesting. I think there will be a lot of to happen there. Lido is leading the place, but I think there will be a lot of so everything that has to do with yield farming and lending. I think it's going to be a lot happening there. I know some of us and our folks would try to to leverage our portfolios, and because we don't want to sell, I don't want to sell any asset. I just want to keep, but if they're generating some, returns, even better. I think there's some interesting stuff on the interoperability side. I like quite a lot, the Hyperliquid that was just launched. So we're playing around it. So there are a lot of cool stuff happening. I think, this year, actually, 2025 will be the year where we see more consolidation of the L2s, and see if it really, the ZK rollout will take place, more strongly. So there's a big bet there. Oh, we'll see. I think there are a lot that are happening, we're excited about it. So we like to follow those, plays around staking, and then there's this interoperability play, and then the L2 plays. That's the way I see, and that we want to test and see how we allocate some capital.
I love it. What was your thoughts when you saw Stripe acquire Bridge? Like one of the bigger, actually one of the smallest, not smaller, but not the biggest, stablecoin ecosystems when you look out there at BVNK and other players. What were your thoughts on that? Are you going to see more M&A here in the next year?
I think so. I think that was a very strategic and important move, because Bridge had a year and a half or so, right? I think their technology still had a lot to mature, but they were really solving a big problem. We were talking about the usage of stablecoins, etc. So give me, like, you're in a developing country. There's liquidity on, USDC running on Ethereum, and then you receive a payment on USDC Solana. How do you convert that to your local currency? So you have to, it's chaotic, it's not seamless done. It's that I see two things. One is, which Bridge start solving is, well, deliver me fiat, I deliver you any stable coin, running in any blockchain. That's one thing. So if you want to, stable coins, let's say you have, imagine that, US banks who issue their stable coins, their USDC. For an end user, I have $1,000 on my wallet. It doesn't matter if it's USDC, USDT, some banks stable coin. I have $1,000 and I need to pay $100 to someone, and which probably is requesting to receiving USDC, Polygon, whatever it is. So in your app, you don't care what's behind. So that's the problem that Bridge was solving. And again, Stripe is a payment infrastructure, right? Not traditional payment infrastructure. So if you want to really be at the ahead of the curve on this stablecoin infrastructure play, they will need that infrastructure. So that's the way we see. There's still a lot of friction for the usage of stablecoin in some case. Obviously, within the DeFi space, it's easy, but if you're trying to bring to the real world usage, then
you run into the same challenges that the real world has with their traditional financial ecosystem, right?
Exactly.
I love it. Marcos, where can people find you if they want to dive a little bit deeper on what you're focused on? Where I'm assuming you're on Twitter, maybe LinkedIn. Where's the best place for people to find you?
Yeah, both Twitter and LinkedIn. I can send me a message. Sure I will reply. And if you want more information, you can go to for Rails or rails.com with RAYLS.com. And then Parfin is the core contributor to building Rails. And we are, we're bringing other partners to help developing the ecosystem. So if you're a builder, join us on this new venture. It's been quite exciting.
I love it. I think Rails is one of the best names for like a payment infrastructure, whether you're in DeFi or traditional. I think that's one of the best names I've heard so far. Marcos, thank you so much for joining the Around the Coin podcast. We hope to maybe have you back at the end of the year and we can see. My prediction is that this was going to be the year of the stable coins. And we saw BVNK just raised 50 million. Your company just raised 10 million, which is awesome. So I think we're going to see a lot of innovation in this space over the next 12 months. Thank you so much for joining us.
Thank you, Stephen.